Good morning, ladies and gentlemen. We're about to start our event. Please get seated. We still got some space in the front row. You're welcome, please. Good day, ladies and gentlemen. Welcome to the parallel session 15, Powering ASEAN Energy Transition, Connectivity, Financing, and Investment. My name is Ridwan Kurniawan. I am the ASEAN-UK Green Transition Fund Fund Manager. GTF is UK climate flagship program provided to ASEAN, and we're so happy to host for today's event with you. I will host this session together with my esteemed moderator, Tamoji Chatterjee, as a Senior Officer, Energy Transition Policy and Governance, SEforALL, as well as Ivana Dimitrova, Lead Energy Advisor for Southeast Asia, UK CDO. Today we have a very packed agenda with key thought leaders from UK and ASEAN, importantly, and obviously the theme is Powering ASEAN Energy Transition, Connectivity, Financing, and Investment. This theme serves as the tagline of UK commitment to support ASEAN in response to challenge of ASEAN energy transformation, as what we discussed the whole in AEBF, the imperative to reduce carbon emission while maintaining energy security and affordability. Today we will debunk this with a lot of sessions. We have two thematic discussions, panels, as well as presentations from the esteemed speakers, both with UK expertise and obviously the regional expertise in ASEAN. Now, without further ado, let's just start the sessions with an opening session. I'm happy and pleased to welcome UK Ambassador to ASEAN, Her Excellency Helen Fazey, for her to deliver her remarks. Her Excellency, please, the stage is yours.
Good morning, Deputy Director General Sulia Sengdalayong of the Lao PDR Ministry of Industry and Commerce, Head of the JET-TP Indonesia Secretariat, Paul Buta-Buta, Head of ASEAN Secretariat Energy and Minerals Division, Yanuwa Fajari, and our co-host and Regional Director of Sustainable Energy for All, Jacqueline Lam. Ladies and gentlemen, good morning and welcome to this session on Powering ASEAN Energy Transition, where we were also excited to be launching the Clean and Just Energy Transition pillar of the ASEAN-UK Green Transition Fund. We've got a stellar lineup of speakers and panelists here today, bringing experience and expertise, which I'm confident will be part of a compelling offer to support the just energy transition in ASEAN. Today's event is going to showcase how investment and expertise provided under the ASEAN-UK Green Transition Fund on green grids, on clean manufacturing and public-private partnerships will strengthen partnerships with ASEAN institutions and member states to meet the challenges of the clean energy transition. We'll also hear from experts in the UK private sector about their views on the challenges and opportunities in regulation, financing, and infrastructure for development of the ASEAN power grid. The UK and ASEAN are approaching our 5th year now as dialogue partners, and over the last 4 and bit years, we've developed our cooperation, deepened our partnership on critical issues like peace and security, economics and trade, and climate and energy. And this Green Transition Fund is really central to our partnership with ASEAN. It's underpinned by a shared vision of a cleaner, greener economy, driving sustainable and inclusive economic growth. And the fund aims to support a just and inclusive transition to a green, climate-resilient economy through leveraging expertise, and investment. It will invest widely in climate policy, green finance, sustainable cities and transport, nature-based solutions, and as we're marking today, the just energy transition. The scale of the challenge is huge. Southeast Asia is set to contribute more than 25% of growth in global energy demand over the next decade. ASEAN is going to need 5 times the current level of investment by 2035 to achieve its climate goals. But the opportunities of clean energy are real too. This region's green transition provides significant opportunities for growth, equivalent to 5% of its GDP. And the UK's climate and energy partnership with ASEAN, underpinned by this Green Transition Fund, aims to unlock the investment needed to make that happen. ASEAN member states are already raising the bar in enhancing political cooperation on ASEAN on energy transition. And the UK is ready to bring our own experience to work in partnership with ASEAN on its clean energy journey. As a nation that has reduced our carbon emissions and grown our economy continuously this century, as one of the most internationally interconnected nations in the world when it comes to our energy supply, and as a home for businesses that bring experience of building and financing the energy transition, such as McDonald, Arup, National Grid Ventures, Standard Chartered, and HSBC, all of whom are going to share their experiences and insight today. Alongside the Green Transition Fund, there are other initiatives that we're working with ASEAN partners on and making an impact. The ASEAN Power Grid Financing Initiative brings together the Asia Development Bank, the World Bank, the ASEAN Centre for Energy, and the ASEAN Secretariat. The UK has contributed to a $6 million package mobilised by the ADB that's already enabling support for the Sarawak-Singapore interconnector. And in Cambodia, a UK contribution of $12 million through the ASEAN Green Climate Facility is directly supporting Cambodian-led SMEs to secure funding to invest in energy efficiency as part of a wider package of investment and policy reform. Working with ASEAN institutions and like-minded partners, I'm confident we can fuel the development of further such projects in the future. So I want to welcome you once again to this event. I want to thank our friends and partners in ASEAN and to those of you who will take forward the exciting programme of work ahead. Thank you very much.
Thank you, Ambassador Helen. Let's continue the sessions by inviting Head of Energy and Mineral Divisions, Mr. Yanwar Fajari, representing the ASEAN Secretariat, to respond to the remarks from the Ambassador. Mr. Yanwar, the stage is yours.
Very good morning, His Majesty Ambassador Helen Fazey, Excellencies, distinguished delegates, ladies and gentlemen. On behalf of the ASEAN Secretariat, it's my great honor and pleasure to join you today at the launch of the ASEAN-UK Green Transition Fund. Let me begin by expressing our deep appreciations to the government of the UK, and in particular, His Majesty Ambassador to ASEAN, for your strong partnerships and commitment in advancing ASEAN's clean and just energy transitions. The timing of this launch could not be more urgent, as the Ambassador mentions earlier about the projections of the energy demand in the coming years. And at the same time, the gaps, whether is it technical, financials, remained significant. And closing this gap will require stronger partnerships and also effective regional cooperations. This UK support is an important step in that direction. It will support the projects that advance renewable energy, grid interconnections, and industrial decarbonizations. And just as importantly, it will help ensure that the transition is inclusive and just, leaving no community behind. And Excellencies, ASEAN is at a pivotal moment. Our region is one of the fastest growing energy markets in the world. The choices that we make today will determine not only our economic futures, but also our climate and sustainability pathway for decades to come. And just yesterday, the ASEAN energy ministers endorsed the ASEAN Plan of Action for Energy Cooperation, or APAC, for 2026 to 2030. It's the ASEAN Strategic Plan in Energy. It brings fresh ambitions anchored by new aspirational targets for 2030. Just to name a few, 40% reductions in energy intensity with the compare as a baseline 2005, 30% renewable energy share in total primary energy supply, and 45% renewable energy share in installed capacity. These targets are ambitious, but they show ASEAN determinations to align energy security, sustainability, and also inclusiveness under one common vision. As you may know that this APAC, or the strategic plan in the energy sectors, built on 7 priority areas, and I think UK supports relevant to these 7 priority areas, particularly the ASEAN power grid, clean coal transformations, energy efficiency and conservation, renewable energy, and also renewable energy policy and planning. These areas form the backbone of the ASEAN's energy cooperations. To make this succeed, we need the continued support for the international community, and we are pleased that the UK is part of this effort. Colleagues, Excellencies, ladies and gentlemen, this launch is just the beginning of our journey. It is an important milestone along the way. We look forward to working closely with the UK and all stakeholders represented here today. I believe that we can deliver tangible impact, strengthen ASEAN energy resilience, and contribute to our region's long-term visions of sustainability and shared prosperity. Let me close by once again expressing ASEAN's sincere appreciations for the UK's continued support and for the dedication of all our implementing and delivery partners. Thank you.
Thank you for your remark, Mr. Yanwa. Ladies and gentlemen, while we are witnessing a clear UK commitment support to ASEAN, and it's exactly matched with the APAC that's soon to be launched, 7 pillar soon, let's just continue with the launch, the symbolic launch of ASEAN-UK Green Transition Fund, Pillar 3, the Clean and Just Energy Transition Portfolio. So I'm happy to invite Ambassador Helen and Mr. Yanwa, if it's okay, you go to the stage. We will have a symbolic handover of the portfolio from the UK to the ASEAN. And ladies and gentlemen, please give your highest appreciations with applause. Thank you very much. Again, with the applause that we have, just to be informed that the booklet is basically the support and the detailed support that UK has already provided and ongoing provisions to ASEAN. This is available in the website of ASEAN-UK-GTF if you just want to know, download there. So that is the end of the opening session, ladies and gentlemen. While it's important right now we discuss the key important discussions why and how we can meet the challenge of the ASEAN transition, I'm happy to invite my colleague Tamojit to be the moderator of the first panel. Tamojit, please. The stage is yours, Tamojit.
Thank you so much, Ridwan, and good morning, welcome everybody. Without further ado, I see that we are running a little late, so let me already call the speakers on stage. So we have a very distinguished panel today. I would like to first call upon Puan Safina Saleh, CEO of the Energy Commission, Malaysia. Please. Next, Mr. Scott Roberts, Head of Southeast Asia Green Finance Hub, Asian Development Bank. Mr. Justin Wu, Regional Head of Climate Change, Asia Pacific, HSBC. And finally, Tuan Jack Tan, Group Vice President, Solar West Holdings, Berhad. Hoping that you're still in the room. Yes, please, Tuan. Good to have you on stage. Welcome, and looking forward to learning more about how we can sort of power financing and scale up the energy transition in the ASEAN region. We, of course, have perspectives from the national level, from the Regional Development Bank, from commercial finance, and from private sector. I'll start with you, Puan Safina. So regulatory certainty is consistently cited as critical for investment decisions. What specific regulatory reforms or policy innovations has the Energy Commission introduced that have demonstrably increased private sector confidence and investment flows into Malaysia?
Okay, thank you. Thank you very much for the question, and thank you to the organizers for inviting me to this panel, which we will, I think the topic that we will be discussing on, which is energy transition investment, is of course a very key pillar in actually making the energy transition a reality. So I'll start with this. By the way, so I wrote a paper, I think was it last year or the year before. I wrote a paper for the UN Conference of Trade and Development, specifically on renewable energy development before this. I don't have time to write papers now since taking on this role. So I'll recap some of the things that was mentioned in the paper, but also some of the things that I realized, is an enhancement to the paper, which I will now share first time in this particular panel. So I think when it comes to regulatory certainty, it's not about, and I'll be very blunt about this, it's not about fixing the price. Because although the energy transition means that we're moving away from very variable fossil fuel prices to more fixed type prices, with the investments that's required in energy transition, it doesn't mean that the cost or the underlying cost of those investments are static, right? They will be dynamic and they will continue to increase over time. So you can't fix prices, and that's typically the kind of question or the kind of proposal that we get. So I would say that regulatory certainty comes in two forms, two elements that I'll just highlight here. There are many other elements, but two elements. The first element is really the certainty of principle. For us, when it comes to the energy transition, what's important is that the regulations are underpinned by three principles. The first principle is the principle of resilience. You cannot do energy transition without ensuring that the system is resilient overall. And that's not just short-term resiliency, it's also long-term resiliency as well, right? And that means that in the case of the energy transition, although everyone talks about investment, how much does it cost, how much return we will make, what's important is that you need to understand that physics supersedes economics in this sense. So physics always comes first. I'm not an engineer, by the way, but I'm learning a lot of the engineering in power sector now. So that's the first principle, resilience. Second principle, equitability. I think you cannot do energy transition without ensuring that it's equitable for all the stakeholders within the ecosystem. And that means all the stakeholders, and in particular, the consumers. So it means that the energy transition, whereas there are costs involved, must now be allocated not just on a shared basis, but allocated fairly to each consumer, allocated fairly to those who actually want green energy at this point in time, who are willing to pay, who can afford to pay, and so on, right? So the principle of equitability is very important underlying regulatory mechanisms that we do. And finally, the third principle. The third principle is that the energy transition is not a sprint, it is a marathon. And that means whatever we do in the regulatory mechanism must also be something that is sustainable, must also be something that is paced, that is that can actually be continued on a momentum, and will continue to actually build the outcomes over a period. So you can't expect that we will get immediate results overnight. So I think those are the three main principles when we talk about regulatory certainty. So second element is how does this apply in the mechanisms that we do? So there are three pathways to implementation of energy transition, if you realize it. I mean, everyone implements it in different sorts of programs, but there are three pathways in implementation. The first pathway is that we green the grid, right? That means we ensure that whatever goes into the grid as a bulk, wholesale, is actually greener, cleaner. So, and underlying that means that the projects that are sourced by the grid are actually based on the grid being the off-taker, and you can basically create the contractual or the commercial mechanisms as such, and typically they are lower in terms of risk. Because it means that you can contract it for the longer term. So you green the grid, you contract it for the longer term. Now, because I'll link that to the investment question. Second is that you bring in the consumers. You bring in the consumers because at the end of the day, the consumers should actually be an active participant in the energy transition. How do you do it? By encouraging and incentivizing the consumers to actually, develop or produce their own solar generation, for example, here. And at the same time for energy efficiency as well. So how do you bring in the consumers? That's important. We design the programs as such. And typically when it comes to investment risk, slightly higher risk, but not as high as, because you know specifically who will pay for all the investments that's required there. And third is actually to bring in the bigger consumers, right? The larger off-takers or the industries, etc. I was talking about prosumers before, you produce and consume. Now I'm just talking about straight end consumers. And that means those who are perhaps contributing a lot more to the GHG emissions should actually invest a lot more, therefore, in the energy transition. So then you design mechanisms that will actually make sure that we can incentivize and motivate them to do so by changing a few things. Like, for example, what we did recently is to unbundle the tariffs towards ensuring that one is equitable. Therefore, if you're connected to a certain voltage level, this is what you pay. Second is to ensure that you pay your fair share of the fossil fuel cost or the insurance cost of the intermittency of any renewable energy that is produced. And that means you pay at a higher level compared to those who can't afford it, right? So you can apply those principles even in that particular implementation pathway. And so, I don't want to take up too much of time. I could go on and on about how we do it with the larger off-takers, but in the third category, the investment risk consideration is a bit higher, right? And so therefore, different pathways, different risk profile, different return expectations, and therefore all the regulatory mechanisms are designed to incentivize and to also allow those risks to be shifted accordingly to the parties who should basically be the ones carrying those risks. Thank you.
Thank you, Puan Safina. That was very insightful. So energy transition is a marathon, not a sprint. And especially talking about risk allocation, let me bring in Scott. On the development finance side, and especially the Green Finance Hub that you're heading, works at the intersection of public and private capital. Can you share an example of how blended finance has successfully transformed an unbankable project, quote unquote, into an attractive investment opportunity? And especially in terms of risk allocation, what were those ingredients that made it work?
So thanks for the question. And first, just congratulations to the UK for the launch of this fund. This kind of support is exactly what's needed, where we're actually moving projects forward in this very operational nature. Near and dear to our heart, I manage the Green Finance Hub of Southeast Asia for ADB, and really what we're trying to do is to work with public sector finance money to catalyze private sector projects. So that's sort of what MDBs like us try to do generally, but this is very, very focused on high ambition climate projects and making sure that every single public sector intervention that we support really drives that private agenda. So a key focus of ours is to mobilize as much attention as we can to early stage project development. I'm pleased to say that in the 5 years we've been running, we've engaged or originated 50 different project concepts, over $7 billion equivalent in project costs financed, of which 2.5 billion has come from co-financing partners. So the whole idea here is to move as many people as we can into the conversation as possible and unlock that investment. And you asked about an example. It's hard to pick a favorite, but given that this is an energy forum, one that I think is quite reflective of the way we would like to work is something that's coming through for approval right now, which is it's in the Philippines, which is the country where ADB is headquartered, our geothermal resource de-risking facility. And just to lay out what that looks like, it's an old idea, but applied with new partners in a new setting. The idea is that we have tremendous geothermal resources in the Philippines. The country is blessed. It's indigenous. It is baseload power. It's zero emissions. And yet hardly any development has happened since the 1980s. The resources that really run the geothermal business in the Philippines are from investments that were made in the 70s and 80s under state ownership. So we have what looks like a market failure here. We have some of the largest geothermal power projects in the world operating in the Philippines, yet very old. Not a lot of private sector players want to make early stage investments, particularly for exploration drilling. So what do we do about that? So in this particular case, an example of the sort of transactions we tried to do is to create within a national bank, in partnership with the Department of Energy, de-risking in the form of sharing some climate capital, taking on some of that risk with the private sector. And the way it works in this particular instance is that 50% of that exploration drilling is risk borne by our facility, where if there is a dry hole, if the exploration drilling does not prove fruitful, that's written off. It's treated as a grant. And yet if they're successful, then it's converted into a loan that's paid back from the revenue proceeds of the project as it moves forward. And what we've seen is just a little bit of catalytic capital. It might come from the UK in this particular case. 90 million or so could unlock $1.5 billion of downstream investment from the private sector ultimately and deliver something like 200 megawatts or 300 megawatts out of that program alone. So this sort of jump-starting process is really where we're focused. You asked about the elements that we need. I mean, in this particular case, we need a strong climate story so we can mobilize money from the UK and others. We need private sector interest and investors who are mindful of the market failure but willing to crack it with us, and a government that sees the potential and is willing to share risk together with the ADB.
Thank you, Scott. That's very insightful, and congratulations on sort of making something unbankable sort of really work on the ground. And I would like to bring private sector finance perspectives, especially at this point, because you mentioned these three ingredients specifically on willingness, risk sharing, and bringing in catalytic financing that sort of then gives 10 times return with private sector coming in as well, right? So Justin, private capital represents 70 to 80% of the financing needed for ASEAN's green transition. What specific risk factors or market conditions would you need to see to deploy sort of the climate finance at scale in the region? And if you can give us an example of an innovative financial structure that HSBC has used to mobilize this capital.
Sure. First of all, thank you for inviting us to be a part of the conversation. Also like to join my congratulations to the UK for launching this fund. I think it's a really important initiative. And I think alongside with Scott here, the reason that I'm here, that we're here, is to one of the reasons is the signal that we are here as private capital, right? That we are here to support the energy transition in ASEAN. And as everybody mentioned, 70 to 80% is a significant number. There's maybe two things I want to tackle with that question, right? So first of all is the context. there's some data from Bloomberg NEF that says that essentially Southeast Asia attracted only about $8 billion of investment into clean energy in 2024, out of a total of $2.1 trillion globally. It's a fraction of that number. It's a good, it's a good number, $8 billion, but it's not nearly enough given the scale and the ambition and the amount of growth that we are seeing and about to see in this region, right? So the question is, how do we catalyze more into this? I think the tricky part about a lot of the things that we want to build in the energy transition is that fundamentally they are risky at the beginning because they require a large input of upfront capital, right? And a long payback period that's, over time. So whether it's renewable energy projects, I think the example of de-risking geothermal, the riskiest part of that is actually when you do the drilling, because you need to spend quite a bit of upfront capital. Similar of offshore wind, when you're doing the wind resource measurement, those things are risky at the beginning, but then once the project is built and operates, it's pretty stable revenue after that. So I think when it comes to sort of maybe examples, I'll just offer two quick examples, and I won't get into too much detail, but I'm happy to talk about it a bit more. I think the first example of sort of innovative financing that we've been involved in, typically I would say one is linked towards outcomes. So the idea is, okay, how do we develop some kind of financing instrument that's more closely aligned to outcomes. So obviously the green finance market around bonds and symbolically linked loans were kind of version one of this, right, that everybody does, but how do we get a little more specific? So one example that we did recently was around outcome-linked bonds. This was an example that something we did with the World Bank actually in Latin America. But the idea was that a portion of the coupon that normally investors to the bond would receive would actually go off into Amazon reforestation projects. So and then these projects would in turn generate high quality carbon removal credits, which are then sold as an offtake to an offtaker, and some of that revenue from that offtake agreement would then go back to the investors, right, in place of the coupon. But they have to put something upfront to do that. And of course, there's a whole bunch of de-risking and et cetera, structuring around that to make sure that everybody is whole. But essentially, that is what an outcome is. But the more revenue you can generate from these reforestation projects as a result of generating these removal credits, the better of that outcome, right? So there's a outcome linked to the performance. And the second one, is the blended finance piece that we all talk about. But I think just to reemphasize what Scott mentioned, the idea of blended finance is actually to bring together public, private, and philanthropic capital together to sort of catalyze particular outcomes, particularly when you're doing this upfront portion of these energy transition projects, which is the riskiest. And then the example I would give here, which probably some of you have heard about this, is our joint venture with Temasek in Singapore on Pentagreen Capital, which recently actually achieved the first close of the Green Investment Partnership Fund, right, which is one of the blended finance partnerships under the Singapore's Fast Speed initiative. So again, that is the beginning of something where we hope to use that that fund to direct towards basically to catalyze some of these high-risk projects across Southeast Asia to support energy transition investment. Thank you.
Thank you so much, Justin. My apologies, we actually have Mr. Leon Chi Liu from SolarWest, the Executive Director and Group Strategy Officer. We have the bankers in the room, Leon, so this is the time to hear from the implementation side. You're the one actually doing the hard work in terms of what are the most critical financing challenges you face when structuring projects. And we've talked a lot about risk here, but what, in your view, are the current risk-sharing mechanisms that would need to evolve for the projects to be more bankable in terms of your views?
Yeah, thanks. Actually, supposed my colleague, investment officer, to join, but he was very sick yesterday. So I got the invitation last night. and that's where I'm a little bit sick, not that sick, still able to make it. And a bit background about myself. I started from oil and gas Schlumberger, 8 years, travel 50 countries, drill for the oil. Then I moved to Sarawak Energy in 2017. I spent 4 years there in the government for the policy making, driving the green energy transition in Sarawak Energy. And I have a lot of my ex-colleagues there. And 4 years ago, I came to SolarWest. So SolarWest, I was in the executive director, and we drive the business across 8 countries in Southeast Asia. So we invest mainly in solar. We start to explore into other verticals like energy storage, hydrogen research with Sarawak government, etc. So solar is still the key investment that we did. So a bit layman, I'm not from the banker. So on the observation that we see from the 8 countries that we invested, I think the investment criteria we see the important is the economy of the country, the risk versus reward. If you look at the Southeast Asia, I think Singapore, Malaysia and Singapore, we having among the strongest economy for the last few years. Just look at the performance of the currency, the ringgit, how much it has appreciated. And it's also contributed by the strong monetary government. I'm not a politician. I'm just looking at the fact that how much the economy has strengthened the last few years in Malaysia. So currency play a big factor in solar investment, because if you look at each megawatt of the solar farm we invested, let's say about 500,000 USD for each megawatt, about 40% is coming from procurement. And procurement of the solar panel, inverter, mounting structure, etc., it contributes about 40% of the capex. So procuring, we always import the item from China and some from US, etc. And the strengthening of the ringgit ultimately reduce our capex significantly. Any 10% appreciation of the ringgit, we reduce our PPA rate by about 4%. So it's quite significant. If you look at the ratio between the currency, economy, strength of a country to the capex of the project. Other than the currency, then the second thing that affect the project viability is about the interest rate. So Malaysia should be having the second lowest interest rate for project financing in Southeast Asia after Singapore. I think Malaysia now, our project financing interest rate is below 4%. And because solar investment at any power plant is about long-term concession, it's up to 20 to 30 years. So interest rate play a significant role in the PPA tariff when we go to competitive bidding. And West Malaysia mainly handled by Energy Commission. So very competitive bidding that the price keep drop to the very small margin that we have. And every 1% drop in the interest rate, it increase our equity return by 3 to 4%. Because for solar farm, we have 80-20 branding of financing and equity. So the interest rate play a big factor of the PPA rate. And that's why with the strong economy, result in strong currency, and with the low interest rate, because of the low risk environment that we have, it result in a very low PPA rate in Malaysia last few years for all the solar farm we invested. And the price is still dropping. And a little bit more details on the risk to go into one solar project, give a bit more engineering details. So solar projects start from the development stage. So we have development risk, you have a construction risk, and then you have operation risk. So the way that we try to minimize the risk, it has to come to the full cycle from the development. You select the site that is less risky, you don't select near to the sea, then you corrode your panel, etc. So development play a big part of the role. So it has to be very reputable developer that try to select to develop a low risk project. Some of the solar farm on the ground mounted, you have mountainous area that you need to do a lot of earthwork, so that will increase the risk significantly as well. And some of the transmission project is a bit far from the substation. If it's 20 kilometer versus 5 kilometer, your transmission line have a risk of Malaysia have a lot of heavy rain, and then the tree drop, your transmission line also collapse. So there is a risk of the transmission line interconnection over 30 years of PPA. So development play a key role. And then followed by a construction by a reputable EPCC. Yeah, we built, and then we are very reliable, SolarWest. So we built and operate more than 2 and 3 gigawatt of solar farm last 2 years. So EPCC for engineering, procuring, then you procure a high tier of equipment, not to jeopardize the quality, and then construction, and then you commission the project. And throughout the cycle, operation risk, we try to manage with the insurance. So now there's a lot of insurance mechanism out there. They not only protect your equipment when your equipment is down, they protect your revenue loss as well. So with the insurance come into the picture, I would say the solar farm, some of the good solar farm developed is as safe as fixed deposit.
Thank you, Leon.
Yeah.
Thanks, that's very insightful. And sorry to cut you off there, but I think I wanted to come back to the finance perspective, especially in terms of some of these big sort of pillars of risk that you have identified and how Solar West is sort of dealing with it. Scott, if I could bring you in first, I mean, especially in terms of from a regional development bank perspective, there's a lot that Leon was also mentioning in terms of bankability criteria, for instance, right? What kind of replicable finance structures do you see that can be scaled across the region?
So scale is the goal. We see a financing gap of 200 billion per year in this region alone for the climate agenda. And I think one of the things that it's a bit of a cliche inside the house at ADB, but we're really trying to work our way out of a job by having the market do as much as it can. And so for us, that means finding things that scale, and then for us to help launch them and then get out of the way. And we do that through private equity fund investments. We do it through blended finance structures where we have co-financiers such as HSBC alongside us. And then to document and publicize and disseminate as much as we can about those models. What we find scales the biggest is areas where a dollar that's either our own or mobilized from a partner like the UK is used for the market to work on its own without financing from ADB. An example of that is in debt capital markets, where the biggest opportunity for scale of all really is. So, in my team, we run a program called the Green, Social, Sustainable, and Other Thematic Bond Program. We've advised now, I think, 4 billion of ASEAN local currency GSS plus issuances to market. Those issuances have been followed on by secondary or third issuances from the same player to the scale of something like 13 or 14 billion dollars equivalent, again in local currency bonds, out of a total ASEAN standard GSS plus market of something like 70 billion. So it's been a meaningful dent in the market, but if you actually look at it from a banking perspective, we put very little money at all. Sometimes we're an anchor investor, but more often than not, what we're trying to do is to help get the system going, particularly with signature issuances. First green bond in country X or Y, the first social sukuk in Indonesia in 2023 by PTS SMF, the first sustainability-linked sovereign bond in Thailand in November last year. I think it was 900 million and oversubscribed 3 times. This is the kind of thing that we really need to kind of build confidence with signature issuances and then, frankly, to get out of the way.
Thanks, Scott. Justin, just to bring you in, especially in terms of this emerging sort of trend that Scott was highlighting, if you could just give us very quickly which areas do you think still require further support, especially in terms of green finance, and what is the role of a commercial bank in supporting the transition?
Yeah, sure. I think Scott mentioned the job of the ADB is to get out of the way at some point when things are catalyzed. I think for us probably is just to make sure that it's BAU, right? That what we do is doesn't require any sort of catalytic financing, and it's just something that you do, And I think that's important when we think about the energy transition, right? ASEAN has made a lot of progress in this space, right? An interesting data point that I read recently as well is that the rate of electrification in ASEAN countries such as Malaysia, Vietnam, and the Philippines is ahead of that of the US. So that means that more of the final energy demand in Malaysia, Vietnam, and the Philippines is being met by electricity than in the US. And that's being driven by three major factors, actually, that are key to the region's economic growth: electric vehicles, data centers, and air conditioning, right, due to increased urbanization. So I think at some point we just need to talk about this as an economic growth agenda, not as something separate, and that requires quite a bit of, obviously, investment. And we don't need to call it anything separately, hopefully, at that point.
Thank you so much, Justin. Puan Safina, I'll come to you for the last word, especially from the national perspective. We heard a lot about electrification growing and demand for it growing. And one of the things, of course, that has been the flavor of the AEBF has been the ASEAN power grid. In terms from a regulatory perspective, this would require a lot of harmonization across the board. So how are you seeing the key governance structures sort of evolving? And if you could just summarize maybe 3 key points that you see which is needed to make the energy markets function very effectively.
Okay, first and foremost, the APG or even regional interconnection within ASEAN, it's not new, right? So there are foundational elements of the governance framework that we already have in place with regards to how we operate, the technical standards and so on. All of that is just really something we're building upon. I think what's really different and what we're trying to push now are actually more of the expansion of the ASEAN power grid, especially the longer interconnections that now need to be built and quite critical to actually focus or to actually evacuate the renewable energy from different areas, right, within the region. And those renewable energies are largely not the same as just supplying dispatchable fossil fuel driven type of energy. They're still intermittent, and hence some of the challenges that we will have to work through. But I think a large part of the challenge that has to be overcome is back to financing. Because of the very complex nature of the interconnections that need to be built now. We're talking about 700-kilometer type of subsea interconnections, and so on. The development risk is actually very high. And this is where different sorts of financing need to come in, different instruments of financing needs to come in to be able to de-risk some of the development risk. That's number one. But number two, because all of these are largely being undertaken by as a private venture, and it's not necessarily the system that's off-taking it. You've got specific off-takers. So the demand/revenue risk is also higher, and we talked about that before, right? So we're very glad that, in Malaysia, we have a very good partnership with all the private sector. Hence, we've got SolarVest investing in the system through the bid exercise and so on. It works because we've also helped the private sector to de-risk. But in these kind of projects, we're talking about off-takers that are not the system, off-takers that are not necessarily, having a specific power purchase contracts that is backed by the government. So how does that work? So we do need to firm up on the off-taker and the requirement from the off-takers, and that I think is a very crucial part of the ASEAN power grid. And that's what we're trying to work through now. How do we actually do the commercial mechanisms, the market mechanisms to actually make it work? Either it's a direct off-taker, because these are long gestation projects, but also whether they sell it through a market or trading platform, which we do need to harmonize between the regions. Thank you.
Thank you so much. I think we could continue this conversation, but the insights that are coming out of this panel, I think have set the stage really well for our next segment on the Green Transition Fund, and congratulations to the UK and ASEAN again, and speaking about public-private partnerships specifically. So back to you, moderator.
Thank you very much. Let's have a round of applause for all the panelists and Tamojit. And yes, as we continue with the closing connections with the need of the new approach on financing APG, and obviously renewable energy is not focused with only that, but as well as the asset with the right grid, right? So we are going to go to the deep dive sessions on the next panel, on second panel actually, on deep dive on APG. I would like to invite our moderator, Ivana Dimitrova, Lead Energy Advisor, Southeast Asia, UK CDO, and then as well as the panelists. I'm happy to invite Mr. Rob Rome, Director of Commercial Customers and Regulation National Grid, Mr. Doni Donosaputro, CEO, Standard Chartered Bank Indonesia and ASEAN Cluster Markets and Board Directors, Mr. Philip Napier-Moore, Energy Sector Leader, Mott MacDonald, Ms. Natasha Kai, Trade and Economic Counselor, UK Mission to ASEAN FCDO, and Dr. Jan Chan, Associate Principal, Southeast Asia Energy Lead, ARUP.
So I realize we are running dangerously close to lunch, so thank you so much for staying with us. And quite conveniently, we are continuing the conversation, and we will be taking a deep dive, pun intended, into subsea interconnectors as a new asset that ASEAN and the ASEAN Power Grid is facing in terms of the challenges of delivering. So we've assembled a stellar cost list across the UK supply chain, and this panel will be very specific. So it will focus on subsea interconnectors and very specific in terms of what it takes to deliver those projects. So all of the panelists you see here have worked across the entire value chain, from designing, developing, delivering and building, as well as financing some of these assets. So it's a very stellar cost list. And I have to say a small disclaimer. So if you hear names like Viking Link, Nemo Link, these are not TV series or Pixar characters. These are actually names of UK interconnectors. Just a slight warning there. And very quickly, I have added up the experience that we have here. So this is an incentive for you to listen in carefully. So a few dozen interconnectors delivered across this panel. Well over 10 gigawatts of interconnection capacity delivered by this panel in some shape or form, and thousands of kilometers of subsea cable, enough to stretch from London to KL. So definitely pay attention. Let me dive deep into then and continue the theme of financing. So Pak Doni from Standard Chartered, surprise, I will come to you first. So Pak Doni, can you tell us from a lender's perspective, what are the main challenges and risks you see in financing cross-border transmission infrastructure? And to make it very tangible for the audience, can you give us an example of where specific financial solution like blended finance has unlocked progress on these projects?
Okay, actually that's a very big question, but a very good morning and really great to be here. And congratulations to the UK Mission to ASEAN for the launch of the fund. And as a UK financial institution, we are the only international bank operating in all the 10 ASEAN markets. So that kind of support actually ASEAN is very important for us, and that real great support by the UK government to ASEAN, goes a long way. I think to your question, APG, I was at the launch of the APG financing initiative on Wednesday. So as I was saying at the time, that this is something that is really very important, very strategic for ASEAN going forward. The connectivity of ASEAN power grids, particularly the renewable power grids, actually is really will be the backbone of ASEAN growth going forward. Having said that, of course, cross-border transmission, particularly if you talk about subsea, that would add further. I know that we got some engineers over here. They will talk. I mean, I'm not an engineer, so I'm a financier, but I understand actually that it requires an even more complex arrangement to set up actually all of those. That leads actually to the financing side as well. Now, you see that financiers will only come in for long-dated assets, as we call it, or projects. if there is predictability or stability of the cash flow going forward. So it's very important to see actually that the off-taking structure is also something that is bankable. Not all off-take actually is bankable, particularly when it comes to cross-border, because you can have multi-countries off-taking. So this adds further risk. In all of the ASEAN markets, some of the ASEAN markets are sub-investment grade. That lends another sort of layer of viability gap, if you will. The other thing is about the environment and social risk standards. I think, look, the scale of APG would require certainly PPP and blended finance. I don't think actually that it can really be, done by any single financial institution alone. I know ADB has committed $10 billion for that. But interestingly, in the discussion earlier today, actually that World Bank still can't finance transmission that also carries fossil fuel within it. So that's a debate actually we're still having, right? For us, I think actually we see that this goes into ultimately reducing CO2 emissions across ASEAN markets. That is a fair game because it's part of the just transition. So there are a lot of risks actually relating to that because ESG standards that's very high, long gestation of the projects, the complexity nature of the constructions and so on. Now, how do we get out of that? Or how do we overcome all of those barriers? I just wanted to say one thing. All the risk, financiers work in the business of risk. So that shouldn't deter any financiers, whether it's public, private sector, philanthropic, to come into that. There's plenty and more than enough instruments, de-risking instruments, credit enhancements, whether viability gap funding, you got off-taker guarantees. World Bank Group actually has just announced the guarantee platform that combines IBRD, policy risk with MIGA's political risk cover. That is really great news because we can cover all of that. So there's horses for courses. Every project would be very different, but there are enough or ample financing structure that are out there. And I'll give you one example. Even some time back, this is not that recent, it's about a decade ago. So we did a transaction with the lead arranger for the Nam Turn project. This is in Laos. It's a hydroelectric power plant, about just over 1 gigawatt, with specific offtake from Thailand energy authorities, as well as actually Laos. So 95% will go to Thailand, 5% will go to Laos. It requires about $1.4 billion that Laos is also a sub-investment grade country, but we corralled MDBs, ECAs, export credit agencies. You got political cover. So World Bank, ADB provide the political cover, about 35% of that. Then you also have some concessional loans coming from the ECAs and the likes of DFIs, Propaco, DEGs, and so on, as well as the private sector financiers. In essence, I think a lot of things actually does work. It's just a matter of actually getting into that. But one thing actually I just wanted to highlight is that whenever there's a feasibility on a project, you got three aspects. One is the technical feasibility. That's for the contractors actually to look into, the project developers. The second part is the financial one. But the third one is the institutional feasibility. We need to ensure that there is harmonization of regulations between all the countries. That is a very big prerequisite. And the power trading mechanism between countries in ASEAN that would have to be agreed, the standards that they have, the regulatory sort of alignment, interoperability, that needs to be there because otherwise that will introduce further risk to the whole interconnectivity of that project.
Thank you, Pak Donny. So a very encouraging message. The financing instruments are in place, the financial structures are there, and financial capital is ready to back those projects.
And may I add further, actually, that the money is actually there.
The money
There's
is
a
there.
lot of people who are competing. I mean, some of the fellow bankers who are there, we're all competing in financing renewable projects in Southeast Asia. And I think actually we're really competing very hard, whether public sector or private sector. So the money is there.
So the money is there. listen carefully. Are the projects there, and are they structured well enough for finance to flow? So maybe I'll go to the developer first, Mr. Rob Rome from National Grid Ventures. So Rob, you've been in the business of developing some of the largest subsea links in the UK. And Pagdoni mentioned technical feasibility. And can you tell us a bit more about, at the macro perspective, first of all, where do you see the benefits of these cross-border links? And at the micro level, how do you demonstrate these benefits to decision makers, to financiers? Have you come across cost-benefit analysis which has really convinced the politicians and the financiers to come behind those projects? Can you give us an example?
Yeah, thanks, Savannah. Yes, hello everyone. Yes, so we have 8 gigawatts of operational interconnectors connecting the UK to our European neighbours, and we've got 2 regulatory deals agreed by Ofgem for our new, what we call offshore hybrid assets. So these are point-to-point interconnectors, but with wind connecting in the middle, much more efficient for onshore connections, as you can probably imagine. And those 2 projects are called Lion Link, the one connecting with the Netherlands, 1.8 gigawatts, due 2034, and the other one is Nautilus, connecting Belgium with a 1.4 gigawatt interconnector with wind in the middle, also 2034. And of course, when we create these projects, you know, they're developer-led projects, so the 2 grid operators, National Grid, and in those 2 examples, TenneT from Netherlands and Elia from Belgium, we get together and we do create a cost benefit. And we need that to get the governments aligned, to get the 2 regulators aligned. It's absolutely essential. And it's very interesting because, you know, each cost benefit shows an envelope of potential scenarios. And let me give you an interesting story about the Lion Link one. The UK in the cost benefit analysis is assumed to create a lot of offshore wind, really up its renewable output, and the Netherlands also, but less than the UK. So the cost benefit, I guess the base scenario had the UK exporting to the Netherlands for, you know, pretty much the 25 years of the project. And of course, what does that do? It increases the prices for consumers in the UK, and it decreases the prices for the consumers in the Netherlands. And it was the first time that any one of our projects showed an increase to consumer prices in the UK. And our regulator, Ofgem, they weren't exactly happy about that. You know, the affordability of electricity for UK consumers is at the top of the agenda at the moment, top of the agenda everywhere, I imagine. So what we had to do is we had to then talk about the strategic benefits of Lion Link to the UK. And of course, if you've listened to any of my presentations, you'll hear me say that when I was running the control centre in the UK trying to keep the lights on during the energy crisis, all of our operational interconnectors exported to our European partners for about 18 months. But every single time, for our 2-hour demand peak in winter, which is 5 to 7 p.m., every time we had a tight market in the UK, those interconnectors came all the way back in, supporting the UK to keep the lights on, and all the way back out. So as well as, you know, an increase to consumer prices, we had a security of supply benefit. Very important. Another strategic benefit was, given the UK was accelerating its connection of offshore wind, if we didn't have Lion Link, that extra route to market, 1.8 gigawatts to the Netherlands, we would have to curtail our wind at great cost. So that was another strategic benefit. And of course, the decarbonisation benefit of allowing the offshore wind in the UK to generate to feed our own demand and also to export. So it's really important that the cost benefit covers all of these strategic benefits, you know, producer surplus, you know, carbon benefits, not curtailing wind, and crucially, security of supply. And initially, I have to say, Ofgem, our regulator, they weren't really in that space. But you know, with the tripartite of government, regulator, developer, and having open conversations, we got there. And so we were able to get regulatory approval based on the strategic benefits that the cost benefit showed.
Thank you, Rob. So you highlight two important points. One of them is looking at the benefits of interconnectors in the round. So it's not just about pricing, but it's also about the system benefits. And another key point is about the operational collaboration at working level. So maybe let's dig deeper into this and come to the engineers. So Phil, I'll come to you first. So you've seen a dozen of subsea interconnectors move from concept to due diligence, as Rob describes. So let's assume that the cost-benefit analysis, the strategic case is well made, we've got the green light. But quite a few projects stumble pre-feasibility, feasibility, after feasibility. What is the most common stumbling block? And can you suggest some leading practices and solutions, be they legal, commercial, or financial, to unblock that progress?
Yeah, thanks, Savannah, and it's a pleasure to be here. Been a great week of discussions on the ASEAN grid. So the project makes economic sense to consumers. Let's assume also that the regulatory framework is mature, and now it's back to the engineers. You know, can we make this project make sense? And that feasibility study, it gives us the chance to understand and demonstrate what that means for a given set of conditions. You know, when we talk about installing a subsea cable, most of the demand on that cable is about the environment you install it in. You know, you buy a cable from a manufacturer, it's a standard product, you want it to transfer a certain amount of power, but can it transfer that amount of power and can it do it in a risk-free way depends on where are you installing it? What are the geotechnical conditions? What's the water depth? How easy is it to land the cables? Is the grid strong where you bring it in? Supply chain. What is the lead time? What are the costs? Can you get the cables, the vessels, the converters? So this is, you know, when we talk about the feasibility study for a solar plant nowadays, it's a pretty simple exercise about a given site. Solar resource, pretty standard costs. When we're talking about the feasibility study for a subsea interconnector, there are very few precedents of private sector non-recourse financing. So, I mean, that's another consideration. The supply chains are very constrained, so we have to engage with the supply chain very early as part of the feasibility. What we can build would depend on that rapidly shifting supply chain dynamic, right? And you know, the tangible technical parameters here are things like what is our cable size, how are we routing it, what's the burial depth, where should the onshore infrastructure be placed, given the burial depth and the technical conditions, what kind of vessel and burial tool are needed? Do we need to cut through rock? Do we need to inject very deep? So, but you know, if we think about the fact that the APG is widely expected to be privately financed, and that's quite unusual in transmission infrastructure still, certainly in Asia, even back in Europe, certainly project finance. You know, we also have to look at, you know, what kind of structure has worked for that. And, you know, we've worked on the owner's side on things like ElecLink through the Channel Tunnel, on the lender's side on NeuConnect and GreenLink, and you've got those precedents. You might have much more demanding requirements on how proven the equipment is. For example, you may not be able to use a given cable supplier because they don't have international track record at that voltage with the private sector, right? Also, you know, when we think about the risk profile, offshore wind, Rob probably does not welcome the impact of offshore wind on his insurance premium because there's been quite a few cable failures, and that does speak to a level of risk in offshore cable installation and operation. There's a stat which you may have heard already from my earlier session that if the subsea cable is 10 to 20% of the cost of an offshore wind farm, it's 80% of the value of insurance claims, right? And it is, if it's not done well, it can be a relatively high risk. So there is fortunately a lot of convergence on what is good practice in terms of cable burial risk assessment, accurate assessment of those downside risks. And that all requires good data. So getting that good data is a key thing. And interestingly, the offshore wind projects we've seen in this region have not always followed that standard international practice. You know, if it's a simple project, near to shore, simple conditions, maybe the lenders can accept that. But if we are talking about these very long links, we're just going to have to follow the follow the rules. You know, use what is best practice internationally, and that does require a certain level of kind of maturity in the supply chain providing that. Last thing I'd just emphasize, you know, I mentioned that early engagement with the supply chain is key. And the lead times can be very long, and Jan will come on to discuss some of the operational considerations of that. But even in equipment selection, that can come in. It can mean a project may not work, or may not work the way you wanted it to originally, right? You typically say that the changeover point where it makes sense to go from an AC link to a DC link is between 50 and 80 kilometers. But we're seeing 100-kilometer links going in with AC just because the DC supply chain is so constrained and you can't get the equipment. And you can just about make that work still. So there is definitely suppressed demand, but more capacity is coming online. So that's a dynamic situation. Yeah, thank you.
Thanks, Phil. So we've got the regulatory alignment, the data, the cable route sorted, and we kind of have a fairly good idea on this hypothetical interconnector project about the route and the equipment. But now it comes to sourcing this and sourcing it and understanding the supply chain. You mentioned some of the challenges around the cable and the vessels. So John, if I can come to you, where do you see the current supply chain bottlenecks, especially on the subsea interconnector value chain? And do you have any suggestions for Southeast Asia developers on how to manage these?
Thank you, Ivana, and thank you, Phil. So when we talk about the supply chain issues, so at the moment, what we are seeing is that you have roughly three biggest bottlenecks. So the first one being the technology suppliers. Technology for subsea cable or subsea interconnectors, the first thing is HVDC cables, as well as HVAC ones. So we're seeing that many of these capacity has been taken up by global projects, European projects, as well as regional projects in offshore wind. So although they are not interconnectors per se, but they are taking up the same supply chain in Asia. So DC cable being the biggest one. The second supply chain from a technology perspective, I would say, is the HVDC converter station itself. So globally, I think there are only a handful of reputable converter supplier, and these are the ones that people would tend to go for with project credentials, with bankable project experience. Hence, it is a big part of the issue from supply chain perspective. I think the third part is what Phil have already mentioned, installation vessels. So installation vessels, as well as installation crew, is a sort of like key consideration with project scheduling and risk management. And in particular for Southeast Asia, transportation vessel to get the cables from factories further afield might be a big problem for Southeast Asia. In terms of construction-wise, you need the specialized cable crews, so to put down the cable, to lay them properly, and the jointers being particularly problematic, given that some of the cables might utilize technologies like MI cables, so mass impregnated, which requires specific skill set, and there's only a handful of experienced jointers around the world. So these are the supply chain from a technology perspective. But when we talk about project implementation, our engagement over here with Southeast Asia developers, we've seen EPC contractors, so we've met dozens of them, and we can see that the technology for subsea interconnector is so novel that many of the EPCs are actually doing it for the first time, or doing it with global expertise coming from Europe. So I think it's very important for developers to think about engaging with proper EPC contractors to make sure that, okay, you take into account all the risks involved during project implementation. So to answer your question about how Southeast Asia utilities could actually work on this, so early engagement is one. The second thing is, I'd say that due to the procurement challenges, it's better to have a more secure pipeline of project to sort of like give the confidence for OEMs, being it cables, being it converter stations, to have the confidence of actually working together, partnering with the project to implement it forward. Thank you.
Thank you, Jan. You've given us quite the list there. So cables, converters, vessels, but also more importantly, you mentioned people and expertise, and that this resides in Europe as well as the UK. And maybe if I can come to our last panelist, Natasha. So, I mean, Natasha, you've been at the front line of connecting UK firms and people to ASEAN opportunities. And what is the most promising area, do you think, for UK-ASEAN collaboration on subsea interconnectors?
Thank you, Ivana, and it's great to be here today with representatives from fantastic British businesses. I'm very conscious of time, so I'll try and keep this very brief. But I'm really excited to just try and talk to you all about how the UK is a really strategic partner for ASEAN in the energy space. And when we talk about subsea interconnectors and energy collaboration, we have a proven history that we want to try and bring to ASEAN. And we're not just interested, we're invested. The UK is currently the 4th largest investor into ASEAN, and we want to deepen that collaboration in the energy space too. There are three points I want to make today, and I will keep it brief. So firstly, the UK has a proven track record in subsea interconnectors. We've been delivering interconnector projects since 1986, and we're proud to be one of the most interconnected energy markets in the world. And our developers, our engineers, our financiers have been doing this for over 40 years. And we're ready to bring that expertise and that experience to ASEAN when we're focusing on the APG. Secondly, we have a private-public partnership that works, and hope we've been demonstrating that this week. We're delighted to be bringing together the UK public sector and our private sector too. Our government is actively supporting collaboration with ASEAN through schemes like the Green Transition Fund, which we've just launched one of the pillars today. And I think we've heard that our private sector stands ready to deliver too. The UK has a substantive financial toolkit that includes support from UK Export Finance as well, which can help to de-risk projects and unlock capital for ASEAN partners. And also, we can utilize platforms like the UK ASEAN Business Council to help bring the private sector expertise on this journey with us too. And finally, we see big opportunities here and a shared vision between the UK and ASEAN, not just in interconnectors, but in grid resilience, offshore wind, and clean energy cooperation. The ASEAN Power Grid Vision aligns perfectly with UK capabilities, and we want to help make it a reality. And whether that's through feasibility studies, regulatory support, or project delivery, the UK stands ready to deliver across the whole energy value chain. So in closing, I think I'll leave it there, and I hope we've demonstrated in many ways the UK can be a really helpful partner through this energy transition with ASEAN. Thank you.
Thank you, Natasha. And this brings us to a close and a final summary message. The UK is here, ready to partner. We've got the money, the engineers, the developers, and now it's all about bringing it all together and mobilizing behind the project and the ASEAN Power Grid. So thank you very much for your attention, and you know how to find those guys if you have any questions, even if you're developing a multi-billion dollar interconnector project. Thank you.
Thank you. Everyone, let's have a round of applause. And yes, as though this is the second panel discussion, it's not end here. We will still got some more to present. And I think, yeah, I'm happy for all the panelists and speakers to get a bit of a photo first, and then we continue to the next sessions. And yeah, well, you hear that in the first panel, energy transition financing is what we should accelerate, and now we are ready that the UK is there to support. Now, let's see from the field, right? Because we got three key players that right now are working on the area of the ASEAN energy transition. I really would so happy to invite Ms. Nadila Shani from ASEAN Center for Energy to deliver her presentation. There she is. Her presentations on the latest cooperation in APG. Shani, please go ahead.
Thank you, Rituan. So I think we've heard a lot of points raised on the discussions in the previous two panels. And I think I just want to highlight what we are cooperating with UK, especially on helping addressing some of these challenges. Can I have my slide? Yeah. So let's go to the next slide. So I think in this week we've heard a lot on APG and what are the benefits. And I think I don't want to repeat what are the benefits of APG in propelling the economic growth in ASEAN and how basically it can be a tools for us in delivering more energy security, and also the how we can evacuate more renewable energy, shared benefit to all the member states. I just want to highlight on the investment that we are going to need to actually implement this. So this is a study from us that it will require 250 billions for both evacuating the renewables potentials, unlocking the generations, and also the transmissions built under the APG if we want to realize the full benefit of renewable energy in the regions. Next slide, please. So this is, we also look at how the current infrastructure under the APG could evolve in the next 10, 20 years up to 2040. In the left side, you see this is the existing one. Mainly, this is a grid-to-grid interconnections that we have between countries, and it's used not for most of it not used for commercial purposes. So it means they are trading in for like a balancing and sort of like reserve sharing basis. But as we go, that we hear a lot of infrastructure will be built, a lot of bilateral cooperations from country to country that's initiated. This infrastructure, or like how interconnected ASEAN will look like in 2040, will be look like the figure in your right. So this is a potential where we actually could use this infrastructure to trade commercially, power trade between countries. And just to break down as well, one of the challenges is how we're gonna build this transmissions capacity that we are going to use. And what there will be a different projects, including subsea as well as a new transmissions project that we need to build. Next slide, please. So basically, when we are look closer on how actually we're gonna build this transmissions infrastructure, especially the cross-border interconnections, there are different projects I mentioned, overhead line projects, but also subsea projects as well. And this kind of projects of transmission infrastructure asset is have a different risk profile. I think previous panel has outlined what are the sort of like different risk profiles, especially for subsea, that needs to be addressed. And then Basically, we are, for especially cross-border projects, we are working with different countries with different regulatory regime as well. And mostly in the regions, the transmissions asset is regulated business, influenced by the fact that the power market is also different. So for that, how we actually build a business model, an innovative business model to finance this transmissions or cross-border interconnections project with different risk profiles. So we've looked upon like different sets of business models that we can adopt or like implement in the regions, considering the different national power market that each country have and different regulatory framework that the ASEAN countries has. So we have a range of different sets of countries, like Singapore, the one that is already liberalized power market, but also the countries like vertically integrated and how they, the government or like the stakeholders in approving these projects. I think we've heard from Puan Safina, there are different considerations, and especially like how the business model, like an off-take model for commercial trading would look like. It really influences how the transmissions or like infrastructure projects will be needed to finance. So next slide. So I'm highlighting what we are cooperating with the UK currently. So we've learned a lot from the panel discussions that led by Ivana previously, that UK has a lot of expertise in terms of looking at different models for transmission project, including subsea as well. So we are now cooperating with the UK to look more closely what kind of business model that might work to implement to different jurisdictions that we have in ASEAN, to de-risk the different projects as well, and how to finance it from different type of sources of financing. So this is something that we are collaborating with the UK, and hopefully this is can be a shared insights as well for the whole ASEAN member states, so that we could implement some of the lesson learned in the ASEAN context. Thank you very much.
Thank you, Shani. And let's continue the next presentations. Once we see the regional context, now we're focusing on the country context. I'm happy to invite Pak Paul Butar-Butar, Head of JETP, Indonesia JETP Secretariat. The stage is yours. Let's have an applause for Pak Paul.
Thank you very much, Pak Ridwan, Pak Yanwar, Bu Helen, and everyone. Thank you for being invited here. Do I have my slides? Okay. Okay, I just want to let's say, describe what have been done under JETP. So, as you know, that during G20 in Bali, this is the agreement that that have been reached between Indonesia government and the partners, international partner groups and GFANs, that we should limit the emissions to 290 by 2030 and increase the renewable in the energy mix. And for that, Indonesia will receive the IPG and GFANs will mobilize up to 20 billion financing. That's the promise, the pledge in 2020. And then we start working on how we could do that, how we could limit the emissions to 290. And then we run our model and we finally agreed that actually we could not reduce for the whole power sector to 290, but we discussed about limit the emissions from on-grid power to 250 million ton of CO2 by 2030, and then increase the renewable energy share by to 44%. But for that, up to 2030, we will need around $100 billion US. That's what we need just for 2030. And with 4 key assumptions. The policy has to be ready, and financing has to be made available. As you can see, the pledge is only 20 billion, but we need around 100 billion just for until 2030. And then the third issue is, as in normal in any project development, then we should not expect any project problem during the implementation. And the last point is actually that PLN as a utility company should do the procurement of the renewable energy quite consistently. And together with that, then the PPA, a bankable PPA, should be prepared. Oops. Doesn't work. Oh yeah, and then what you can see here is actually that's the pledge from each country. We took out the US since they withdrawn from JETP in March, and the total financing now is actually 21 billion around. It should be invested in the 6 focus area. We include the energy efficiency and electrification, transmission and distribution, then also dispatchable and variable renewable. And we also include the early coal retirement, because the fact is that there is financing that has been made available up to 2.5 billion for early retirement. And also, we include the development of renewable energy supply chain. We really like to see that with the total renewable energy to be deployed in Indonesia later on, that Indonesia should not only become the market for the renewable energy technology. So here, to the number 1, we also include the electrification of transportation. So the initial financing was actually only after the US left. The initial financing was left about 19.6 billion, but for the electrification of transportation, we received additional pledge from Japan to finance the MRT in Jakarta. So so this is the total financing now. So the approved project now is almost 2 billion. That include actually the financing for the MRT, almost 1.8 billion. And then there's a program that include also result-based lending that goes to PLN or policy-based lending that go to Ministry of Finance. We still have, we expect around 6.2 billion projects as financing in project pipeline. And so far we have almost 190 million of grants, and then 1 billion guarantee from the UK guarantee to the World Bank that we could use to finance energy transition projects. Yeah, so what is missing actually from the, or what we can learn from the JETP implementation in Indonesia? First is in the process. So when we start the process in 2023, we actually have a great help from a lot of parties. So from government, from civil society, from PLN, from let's say international think tank, ADB, World Bank, and UK Mentari and others that help us in actually in preparing all the analytical analytics of the JETP, how we could reach the 290 and so on, and also to analyze what need to be financed and how much and so on. What is the cost? However, the financing that we have seen so far goes actually through traditional financing. It's just like business as usual. If you look at the financing from World Bank, from ADB, from or private or commercial financing, the process is the same. So there's no special treatment actually for JETP project. So we experience the same process, and I cannot blame them for that. That's why it is important actually, if we really want to move forward with the energy transition, we expect, let's say, I would say innovative new financing would be needed. So the panel before talking about the guarantee or so on, that would be the thing that support the financing. And then we agree with the government that part of the public funding that has to be mobilized as part of the JETP has to be used for financing the grid interconnection. And because as presented by Anissa before, so the connection between Sumatra to Batam, Sumatra to Java, and later on from Kalimantan to Java, it would cost a lot, but would only have, let's say, very low return for PLN. So that's why we need for specific project, just like transmission, a very low interest rate financing. And some of the geothermal project, actually, we expect to get it financed through the concessional loan. And then, what is missing? Why, for example, so far only a small money has been mobilized, and that's actually because the fact when we prepared the JETP program, there are not so many projects that is financial ready, and that's one of the problem. So, if we don't have project ready, then how can we ask the financial institution to finance projects? And that's always the problem in the financing renewable. We are always complaining about money is not sufficiently available, but actually the problem is the project is not ready. So that's why one of the biggest problem that we see actually in the project development, if we look at this approved grant, for example, we have committed almost commitment for almost 190 million, but none of them actually has been used for project preparation. So while for the procurement of the project by utility company, by PLN, it needs preparation. We need to have PLN prepare the feasibility study, or the project developers prepare feasibility study that is bankable, that is really suitable for the tender. But we don't have that money. So we have discussed with IPG and GFANS whether they could actually reallocate the grant here so that it could be used for financing project preparation. But unfortunately, no one would be willing to finance this kind of preparatory study. So that's one of the I would say one of the biggest challenge that we see under JETP. People always ask us why the financing of why the promised financing has not been mobilized massively, and that's actually the problem. So we don't have enough project because it is not prepared properly. And also one of the problem that we see as part of the commitment from or pledge from from IPG and GFANS is actually that funding is only for large-scale projects. Not much funding available for energy efficiency and so on. That's why we are happy to let's say get support from UK. In 2023, we asked UK whether they could actually prepare a kind of, let's say, facilities to finance energy efficiency, and they answered that with the financing of some, let's say, effort in energy efficiency for ESCO and so on, and also no financing for community-level projects. And that's one of the biggest complaints that we got from civil society, because IPG or JETP is only for large scale, only for large, let's say, project developers, and none for community based. That's why last time we asked SEforALL whether they could help us in getting financing for, let's say, off-grid projects, and they will start with some projects. I hope that it could materialize soon. Could, let's say, see investment in community-based project later on. I would stop here. Thank you very much.
Thank you very much, Paul. And then that's lesson learned from Indonesia, and we still get one more lesson learned from Lao PDR. Let's welcome Mr. Solia Sengdalavong, Deputy Director General of the Department of Energy Policy and Planning, Ministry of Industry and Commerce, Lao PDR. The stage is yours, sir.
Yes.
Good afternoon, distinguished guests, ladies and gentlemen. I'm the lucky person because I'm the last speaker, I think. Thank you very much for staying with us here during the lunchtime. Of course, I have invited to talk about the success story and lesson learned in the power development and financing energy for energy transition in at the national level, especially the Lao PDR. And of course, sorry? Oh, which one? Sorry. And I have only 5 minutes to present you about what we have done in Lao PDR. So, and of course, I would like to, next please. I would like to start from introduce about the economy and foreign direct investment. And of course, Lao PDR is the main industry is the electricity and mining is about the 30% is the electricity and mining is about the 22%, and the rest for the service and agriculture. This is a very important sector for our countries. Next, please. And of course, the government has a very special set up the special strategy and policy for foresting the foreign investment, and of course, especially for the energy sector, such as hydropower project development, we provide with very low royalty rate. It's about 1% only, and of course, with the long-term period, it's about 25 to 30 years for the contract. And their incentive is the free equipment import tax and extra. This is one of the special policy and strategy for the Lao government to foresting the investment. Next, please. And this is also would like to show you some project, the big project for the renewable development in Lao PDR. And of course, in the coming years, those projects will be COD, especially the monsoon project. This is the big project for the wind farm project in Lao PDR. Next, please. And this is also some big project in the northern of Lao PDR, invested by the Chinese company for the solar PV, and this is also one of the target for the Lao government to have the power supply in the northern of Lao and also export. Next, please. And this is some as you may know, the Lao PDR is the electricity export countries. Almost 70% of electricity generation are export to neighboring countries like Thailand, Vietnam, Cambodia, Singapore, China, and so on. Next, please. This is I will show you the number of the export that we have already signing the MOU between the neighboring countries. Next, please. And this is also, I would like to present you about the power sector organization structure. This is why I'm showing you, because this organization is very important sector for moving the energy transition development in our country, and of course in the ASEAN country as well. Next, please. Yeah, this is some lesson learned about the financing energy transition in Lao PDR. Of course, as I mentioned, we have a very special have special strategy, and here is some lesson for the financial energy transition in the national level. And I'm happy to share with you this one because of course there's some lesson in Lao PDR maybe not fits to your country, but it depends on the strategy and policy difference for the country. But of course, Lao PDR, we have, as I mentioned, the power development projects almost in Lao is the project finance, and equity is about 20 or 30%, and debt about 70 and 80%. But as I mentioned, we also have the IPP project. This is one of the key that we have the IPP project in our country, and of course, almost project is the BOT. Next, please. And this is the just 2 months or 3 months ago. Yeah. This is in order to promote the energy transition development in our country. The government authorized to the promotion bank to establish the green bond. It's aimed to mobilize the capital for sustainable project development, such as the hydro project, solar, wind, and other clean transportation. This is also one the important for the financial for the energy transition in Laos. And of course, we also now work out with many financial international organization, which this is also we work closely with the finance institute to carry out the financial green financial in our country. And of course, I think the most important things in order to achieve the national and regional level solution for the mobilized private finance for the energy transaction, I think first the innovation financing model such as the green bond, brain finance, and concessional loan as to bridge the gap between the electricity demand and supply chains capital. And the second, the regional risk mitigation mechanism is to attract the private investment, address concern over the currency, functional, foreign policy, uncertain and long-term bankability of the power purchase agreement. And the final I would like to say is the strengthening multilateral cooperation among ASEAN member states, development partners, and the private sector will be a key to ensuring that the energy transition project will be both the finance and renewable business. So, yeah. This is some information I would like to share with you here. Thank you very much for your kind attention. Thank you.
Thank you very much, ladies and gentlemen. And as we're almost go to the lunchtime, but we still get one more important thing, and this is get back to the point of the launch of portfolio green finance, energy transition portfolio of GTF. We have one more presentation and fireside chat, and this is all about the decarbonization and pushing the transitions again. I'm happy to invite Abhishek Kumar from KPMG Malaysia to present his point. Abhishek, time is yours.
Thanks, Rizwan. Good afternoon, everybody. Ladies and gentlemen, thank you for the opportunity Okay. I'll make it quick. I'm very hungry. So let's start with the point over here. Our project, Work Package 3.1 under the Green Transition Fund scheme, okay, UK-PAC. So our project is called Green Grids Rising. What is it? There are three main components. Number one, coal plant repurposing. Number two, how ASEAN Power Grid can support in that, how renewables can contribute to the objective. And number three, smart grid. How smart grid solutions can support variable renewable energy integration as well as bringing flexibility to coal plants. Those are three things that we are going to address in the overall engagement. Now, when we talk about coal plant repurposing, it's quite unique for ASEAN. It's a young, coal plants are young here, less than 10 years, around 60% of the capacity which is there. For about 40% of the generation mix in ASEAN is from coal. The security of supply is maintained through the coal plants that are in operations. So any repurposing decision needs to take into account the reliability, security, affordability for the consumers in ASEAN. And that is the objective of our study, how we are going to address that. Next slide, please. Okay. So in that, three components that we are going to look for. When we talk about repurposing, step one, abating the emissions from the coal plant. That could be putting in new technologies, co-firing with alternate fuels. Number two, rather than having coal plants as base load, can it be used for operational flexibility? Introduce technologies for that. And finally, maybe they can become museums in the future, shopping malls. That's we call it repurposing, replacing with new alternate uses. Next slide, please. Okay. The role of ASEAN Power Grid to provide renewable energy as a potential to replace what is the base coal supply that is there. What are the key governance mechanisms that needs to be put in place to allow that to happen, where renewable energy is transferred across the region to replace the base load that the coal provides. And that essentially creates a larger, cleaner energy market. So to sum it up, last slide, please. There are four components that we are going to produce. Number one, preparation of guidelines for rapid assessment for coal plant repurposing. Number two, institutional and governance models for cross-border exchange, focus on renewable energy dispatch. Number three, transition credits. We all have heard about carbon credits, transition credits, how that can be generated and utilized for cross-border exchange. And finally, the fourth one is about smart grid. Knowledge capacity building to use smart grid solutions for variable renewable energy as well as for flexibility for coal plants. Okay. Thank you very much.
Thank you, Abhishek. And again, the support of UK is actually beyond APG. We still get one more area which we want to show, which is industrial decarbonization. I'm happy to invite in our fireside chat speakers, Ms. Jacqueline Lam, Regional Director of Asia Sustainable Energy for All, and as well as Ms. Trang Nguyen, Head of International Program and Engagement and Climate Work Center. The stage is yours. Great. Happy for you to start.
Thank you very much. Good afternoon, colleagues. It's a really, it's such a pleasure to be here and very happy to be supporting, of course, the UK ASEAN Green Transition Fund. Maybe I'll do a really quick introduction of sustainable energy for all. Of course, my colleague earlier had moderated the panel. We're working on the energy transition and investment for green value chains in ASEAN, and this is really, very closely linked to a large component of the ASEAN Green Transition Fund energy sector support, which is absolutely crucial given the intersection of course, delivery of SDG 7 for clean and affordable universal energy access in relation to SDG 13 on climate action as well. Now, a lot of the work that is currently taking place through our program in ASEAN is to really look at how the energy sector is going to be a key enabler for the decarbonization of multiple sectors, from road to buildings to industrial activities, and then also to use that to map the potential renewable energy demand, and of course the potential for manufacturing of renewable energy components in order for ASEAN to fully optimize its manufacturing capabilities to support also the deployment of renewable energy within the region. So this is being done through our Sustainable Energy for All energy transition model, which really looks at the least cost optimization of current available solutions in order to support the clean energy transition, while also mapping this into potential critical minerals demand, of which we are also separately working with the ASEAN workstream on minerals to look at both the trade and investment potential components related to critical minerals, including value addition investments, manufacturing capabilities related to renewable energy manufacturing, as well as critical minerals demand. And then, of course, how to better leverage the integrated trade and supply value chain that already exists within ASEAN, but to also fully leverage the existing, for example, ASEAN trade agreements, as well as renewable energy manufacturing value chains, and to optimize them across the region for a fully integrated green value chain as well. So these are some of the key comparative advantage areas that we have already identified through an initial study that was done in 2023, looking at solar PV, electric 2- and 3-wheelers, as well as battery manufacturing as some of the key areas for renewable energy manufacturing that ASEAN member states have comparative advantage in producing. Thanks.
Thank you, Jack. And that's the focus of in industry, in the green value chain. But let's get back to Trang, to the Climate Works work in regards to how can then somehow, because the industry, while we want to decarbonize, still need to be competitive, and what will be the approach that somehow are also supported by the GTF program? Trang.
Yeah, sure. Thank you, Ridwan. I think in terms of the decarbonization challenges, I think probably let me just set the context a little bit in terms of how we approach the program. I think the global context, I'm not sure whether they're going to show slides or not. Yeah. Yeah. So this is the global context. One of the slides shown by one of our colleagues from Mission Possible Partnership, who is our implementing partner. At the moment, one of the China or EU and US continue to be one of the largest investor in the global pipelines for clean industries. But however, there is a new emerging blocks of countries who are attracting new clean investment, which account for around 60% of the total global pipelines. And this block called the New Industrial Sunbelt. And this Industrial Sunbelt basically indicate that the shifting of manufacturing sectors and future industry are shifting to the countries that have a lot of renewable resources, and a lot of them are actually in emerging markets. And as you can see from the picture, ASEAN is in the center of this industrial sunbelt. So there's a lot of opportunity for ASEAN and the region to build the industrial competitiveness from the renewable energy potential. So that's where we approach the program. However, but also a lot of speakers today have recognized a lot of challenges. And for example, investment financing is one of the biggest challenges. I look at the stats yesterday. In order to decarbonize Vietnam and Indonesia, it will take around 120 billion or 130 billion in itself to get to net zero in industrial sectors, and that doesn't include, like, for example, upgrade the grids and solution related to the power sector. So the investment is large. So a lot of other speakers today already talk about that, and it's very important to address these investment challenges. So the second slide, please. So the way we approach the program, so first of all, we do believe that there's a strong case for a coordinated ASEAN clean manufacturing strategy, one that integrates the region industrial competitiveness and the decarbonization opportunities in the region. So we really look forward in the next few months working with the UK government, with the ASEAN Secretariat, ASEAN Center for Energy, Palladium, to work on a strategy that sort of synchronize the industrial competitiveness, but also the climate outcomes, industrial decarbonization outcome. And we look at it through the very sector-specific focus, and provide a very sector-specific detailed solutions using things like cost-competitive analysis and understanding what is the marginal abatement cost to really prioritize the opportunities and what are the enabling policy needed. And then we go to the further level, which is the technology level. And what we learn is that technologies, for example, with the same technology level of readiness, when it comes to different contexts, the cost of adopting that technologies can be very different. So we really want to bring out some of the specific case study in terms of what is the cost curve of deploying this kind of technology in certain contexts and certain country. And the last one is about the governance and partnership, recognizing the strong potential of ASEAN being, having fostered the trade mechanism and fostering a lot of partnership, not within the region, but also with the existing dialogue partners, 11 dialogue partners, and as Natasha said, from interest to invest, so how to foster that relationship, which is very important. I'm going to pause there. Thank you.
Thank you, Trang. So I think we got to, one focus on industrial decarb, but two different approaches that GTF offer. Right? The first one is pretty high level on the value chains, how then we are seeing the potentials of the green value chains ASEAN would develop, and then focus specific sector then in an industry, how then we able to provide solutions there. So I'll get back to Jack in the sense of how then the program that we are working on together in the following years will then able to, let's get back to the green value chain, right? Because you say that, as what Trang also mentioned, ASEAN is a new industry growth, and ASEAN should be able to build its own value chain actually with the model that you plan in. So how would then actually the things will be able to manifest for its own ASEAN benefit, right?
Thank you very much. Yes, so there is what we want to try and do with our initiative is to really look at, along the different parts of the value chain, along the different steps of manufacturing, and really looking at a life cycle analysis of where the critical minerals come from, where the potential components for manufacturing are going to, for them, be contributed into. And we also want to look at exploring, for example, the end-of-life cycle management of, for example, end-of-life cycle of battery components, solar PV components, and the potential, therefore, for recovery of critical minerals and other, metallic elements, for example, from each of these components. So really identifying, for example, in the case of Indonesia, where there is comparative advantage, obviously, in the nickel production, but downstreaming in Indonesia, but also looking at advanced manufacturing, for example, of the battery components, which requires a significant level of precision in the manufacturing, and where there are also existing capabilities that reside in Malaysia and Vietnam and Thailand, for example. And so how can ASEAN member states then integrate some of these regional value chain activities and practices across the board, and where battery recycling is a fairly new activity, looking ahead, 10 years ahead, for when end-of-life cycle electric vehicles and electric two-wheelers start to come into play, where should some of these resource recovery and recycling facilities, where in ASEAN can some of these facilities be established in order to really fully, for the member state to fully leverage their respective comparative advantages and capabilities within that supply chain space. So this is what the study and the activities in this project will seek to unpack as well. Thanks.
Super. And then once the study, we got the final green value chain analysis where it's actually the potential is there. We want to build a lot of renewable power with solars, but then obviously mineral processing is needed, and mineral processing is hard to abate industry. Thus, SEimpact is trying to offer something there. So would you be able to elaborate more on how then at least SEimpact will be able to support the hard to abate industry decarbonization with your technological solution strand that you somehow touched a bit?
Yeah, thanks, Ridwan. So we see technology. I mean, a lot of people have done a lot of technology toolkits. Like if you Google technology for green steel, you will have a long list of technology that being available at different level, tier 1, tier 2, tier 3, tier 4. The most important thing when we talk about technology is that how technology in a context being applied. And again, I cannot stress enough how important that needs to be put in the local context policy people. I think in order to enable that, I just think about, let's say, I know diplomats like 3 points, I just say 4 points, 4 Ps, policy, people, pipelines, and partners. So I think that's the 4 key elements which are very important for industrial decarbonization. So on the policy side, and again, there's 100 of policy we can talk about, but I think normally we see it as the supply, demand, and supply chain. So on the supply side, of course, it's very important to recognize that the clean power generation is very important, and I know that a lot of other colleagues like ECA and KPMG and other colleagues are tackling these challenges, and it's extremely important for industrial decarbonization. And then we also work a lot on net zero industrial precinct, which is a place-based approach to demonstrate how a place like, for example, clean energy supply, clean energy hub can leverage infrastructures, coordinated infrastructure in a place to help demonstrate the manufacturing of that facilities. On the demand side, if countries can ask, if we do a lot of effort to manufacturing clean products, where are we going to export, what we're going to use that for. So demand side is equally as important as policy on the supply side. And demand side, there are long lists, again, of policy that need to be considered, put into context, and understand the costs and benefits, standardization, public procurement, and then how to integrate the supply chain with other countries, like for example, intra-trade within ASEAN is around 25%, but then there's a lot of opportunity to tackle in demand center in, for example, Japan, Korea, and also how to build the existing leverage partnership to build that supply chain. And then people is very important, and people is. We can talk about technology, but if we don't have the right skill set to actually understanding the adoption of those technology, calculate the investment in the technology is very important. So again, that's another element. And then I'm just going to pause it. I know we run out of time.
Thank you. It's a bit unfortunate that we're closing to lunchtime, and how important this discussion is actually when people are so excited about potentials there, finance there for the grid and renewable energy. But in the end, industrial decarbonization is the one serving the backbone on what value chain we need to build, what need to do in the industry sector so then it's still hard to abate. And then can be decarbonized. But anyway, we're almost closing. So thank you. Let's have a round of applause for Trang and Jacqueline, everyone. So yeah, we are on the end of the session, and we would really love to extend our gratitude for you attending this launch and the sessions on powering ASEAN energy transition. Just to inform that this is not the end of GTF. GTF consists of 5 pillars. This is the 3rd pillar. And we will see the next launch in the ASEAN Business Investors Summit for on energy finance pillar next week in KL and METEC. So let's see you soon. And yeah, I'm happy to have a discussions later if you want to know more about the Green Transition Fund, the 3rd pillar as well as the 2nd pillar. And yeah, thank you everyone. And yeah, have a nice lunch and have a nice day.